All right. I want to do a quick video on technical analysis with Clover Health. Some things I was looking at today. I was trying to find correlations between Clover Health and other ticker symbols, whether they be ETFs, other stocks, other healthcare companies, or even anything out of the ordinary, right? And so I got this tool over here which does that for me. That's not it. So over here, it's a match finder. It's kind of funny how the guy describes it in the about script, right? He says, yeah, Match Finder is the dating app of indicators. It takes the current ticker and finds the most compatible match over a recent time period, right? So it's basically like trying to find the correlations. It's the dating app. All right. So yeah, it does its job. So that's all that's important. It's got up to 40 tickers that you can put on it. The default settings doesn't come with all of these. I had to add United Healthcare, Molina, CNC. I forgot what that one. It's another healthcare company. Um, so I had to kind of customize it there a little bit. But you can see how it operates right here. These are the ones that I replaced. Basically, took off the ones that were on the very end and added United Healthcare and whatnot in there. You can move it around and stuff like that. The correlation window length, uh, I got it set at exactly 1 year worth of trading because there's 252 trading days in a year, I believe. You could probably bump it down if you wanted to. It comes with 30, but 30 is just too small of a window. I'm thinking, you're looking at the daily chart, right? You want to at least have 200 or something like that, maybe 150. But let's go to 200 and come over here. And then it's at 200. So this is what it's looking at, saying United Healthcare at 68% correlation. And then here's something that's surprising. It surprised me, right? You got natural gas and United Healthcare that pretty much correlate with um, Clover Health around the same amount, and Molina, CNC, and so on, right? Whereas here goes the healthcare ETF, right, on the S&P 500. It's not even nowhere near. So if we go to United Healthcare, right, and it's automatically going to say United Healthcare is correlated with United Healthcare 100%. But let's see what it says about natural gas, considering that it's correlated to, um, it's correlated to Clover Health at the same rate, same percentage. I mean, so yeah, 100%, of course, and fucking natural gas is 70% correlated to United Healthcare using this time window, right? The time window does change the outlook to it. Let's do the 252 days, which is the past year of you know trading, and let's see what the correlation is on that. A solid year, right? Like year over year. It maxes out at 500, but that's just too much. I don't think everything will be correlated within 500 bars. So it's thinking right here, trying to do the math. Um, we're on the day. Yeah. So it's saying that 100% CNC is next, Molina, and then it's almost six, was that 58.65. You get 65 rounded up to 59, and you get 59 rounded up. Say it's around 60% correlated, which is above half. That's still surprising. And let's shorten the distance up just for shits and giggles or for research and development. Let's give it 180 days, which is, you would say, the 180-day moving average would be considered in an uptrend, right? Just like the 200, but it's a little bit tighter. So right there, it's working. So 180 days. Once it stops, then it will have the results. There it goes. So, yep. Um, it's about the same 60% at 180 days. Now let's really chop it down to like, well, I mean, look at it. Well, no, that's United Healthcare is automatically going to put that up. So it's basically showing you the same thing twice. The numbers of what we're concerned about here. So let's go back and let's do it for 90 days instead and see where it's at. A little eyeball right here. That's where it's at. Thinking, holy shit. Well, wait a minute here. It says the IWM is at 80 because it can't find the best match with itself. So it's saying in the past 90 days, small caps correlated to it the most. Not even the healthcare sector is on here as far as, wait, no, the VW one. No, I think that's a Vanguard ticker. Like this is a Vanguard. Spies down here. Here is this LV XL XU XLV 46%. So XLV is not even correlated to it within that time span. It's more of the small caps. All right, now let's really cut it down. I think anything below 60 is just too much. Well, the default settings does come at 30, so um, yeah. Here, what is that? XLRE. Okay. Now let's put it back on at least 200. Molina is first place with United on that small time frame, 60-day window. Uh, uh, fucking natural gas. I would say having natural gas up there is probably something worth looking at, but XLV finally showed up on the green. And let's do 300 bars one more time. I think that's also a good number. 300 to 250, somewhere in between there. It won't be so biased to a year. You'll give it a little bit more than a year with 300. I think that maybe 252 is just too biased with this with that. Like you want the underlying trend, like correlation, right? So it's possible that 300 is probably a better bet, but so yeah, CNC, Molina. See, 30% right here when you do a 300. All right, enough with that one. We'll keep it on 300. And let's go back to Clove. Now here's something cool and interesting. On this template, I was I was looking at it. I believe it was somewhere around this level, or it was getting there. Maybe it was right here. I said it was going to come down to about this zone, which was around here, so it's not too far off. And then it was going to pop up. Then it was going to go down and have a divergence and go down further, all the way to around this level right here. And that's pretty much where it's at now, except it did it a lot quicker than I was anticipating. So that's just a fun, for instance, right there. Right. Um, So yeah, United Healthcare with 300 bars, 300 trading days. It's going to be a 67% correlation. CNC 66, Molina, and then down here. And if we try to shorten it up a little bit, oops, and we do the, let's see, if we do the, what did I say, 60-day minimum, right? Is anything smaller than that? I think it's just too small. So let's make it to where the smallest time frame window could be. See what the correlation says about it. Then you can also move this right here. It's like scaling the price action with the line. It could sit right next to it and stuff. Okay, so it's saying in the last 60 days, the XLY has a 60% correlation. I mean, they're pretty much all green. I really don't like that. Yeah. Oops. Okay, so yeah, they're all green, so I pretty much don't like that. Gotta have to, want to see more red actually than green. That way it really cements the correlation in there. When everything's correlating with it, then to me that sounds like just random picks and shit. This time frame is too small. You really can't get a decisive answer when everything is saying yes. You should only have a few things saying yes and everything's saying no. That puts the outliners there. You know what I mean? So let's do 150. See more like that. Um, was fucking Molina, CNC, United Healthcare, then natural gas, right? So Molina, we're trying to increase the value of it a little bit more. I'm trying to get to maybe a correlation rate or percentage of like 60 to 70. So United Healthcare, there you go, at 200 bars. And let's do the whole year again. Let's do the 252, 71. It makes it even better. And what was the 300 again? Still, still United Healthcare. All right. So yeah, I think the yearly is probably the best way to go, which is going to be the 252, or we could just say 250 and have a balance there. All right. There's another thing too that kind of got me. Whoa, how did that happen? Oh, that was something else. All right. Yeah, there was another thing too. If we do, what is it? We do this here and we do United Healthcare and right there, those two. And then we need to move them to no scale. Where you at? There you go. No scale, no scale. Okay. So that's them right here in the background. And I need to take that off. It's going to get a little bit messy here because take off my drawings. Okay. Let's look at this price action here. All right. So here's the top um, where Clover kind of topped out here. You can see it. If we were to draw lines here, so did United Healthcare. And if we were to draw a line here, so did Molina, right? Now, if we look at this, say, I think this was the earnings report, and, it went down to there, right? My drawings popped up because I'm drawing now. But there's that, right, for United Healthcare. And then there's this one for Molina, right? And then there's that one for Clover Health. I just find that interesting how first it was United Healthcare, then it was Molina, then Clover Health. They all went down. And then the correlation starts like really getting intense right here and here, right? And then it tops out. United Healthcare does more than, um, well, yeah, because which one? Yeah. So Molina's green. Molina drops first, then United Healthcare simultaneously with uh, Clover Health. So I need to I need to get these three, this one, and this one, and somehow combine them all together and get like a price action concept going there with them all merged together into one. So if we get rid of those, now that's just the interesting thing I wanted to show you now. Let's get rid of that. So there's that, that, and then that. And then let's get rid of the drawings again. Okay. Now let's get rid of. Okay. Now let's go. So Clover, this is what I anticipate for the price action of Clover. I don't have that really going out too far because it's more. These are more about um, like cycle analysis, rhythms. It's more about um, you know trying to figure out if it's going to go up or down, pretty much, right? Regardless of how high or how low it goes, just like in a momentum period or not. You know, negative cash flow, positive cash flow, things of that nature. So right here, this indicator right here is kind of like a volume profile, but this one has to do with pivots. It's a pivot profile, and most of the time, or all of the time, it's actually pivot off this area, this price area right here around $2.50. It's always been a bullish one. And just like with this four pivot area right there, which is those been four pivots off, it's always been a bearish one, right? Then you get the volume profile, right, with price action or the order blocks. You kind of like build them all together. This is a fair value gap, right? That's going to have to be filled sooner or later. I don't think it's going to be filled this year. I anticipate, judging by what I'm reading here with these indicators, how they're responding to the future cast and the trend and where it's at, I believe that 250 is going to hold as support looking forward. That we should be pivoting. This zone right here is almost neutral. You see, three for three, three for three, three for four, three for three, six for two. So this has more bullish pivoting than it does bearish. But about right here in this zone, which is the gap area, it's almost equal, except bears have a little bit more ground here for the most part. It doesn't get until about right here, which is above the gap, to well, to where bearish pivots have occurred more often than not. And then it gets more extreme as the higher we go. But it's safe to say that anything, and I got to get my drawings back up, anything within this box right here, from here to here, is the accumulation zone. This zone right here. So anything below what the price is currently at right now, if it ever gets there again, This should be buying, 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 then not, right? Waiting. Maybe buying a little bit if it goes underneath there, right? It's like right here. If it goes underneath there, probably buying, right? But this zone is where I'm looking at. I'm paying attention to. Also, the extremes here. Once it gets to around where this extreme low was on this indicator, this orange, then it turns gray. Let me shut these off again. Right here, if it passes this or gets close to it, that's also like confidence. You're buying at a low price, right? And then you got to use all these other ones to kind of like blend it in all together and stuff. But like I said, I feel like this is, and we have the whale indicator go off over here, purchase, 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 and this was a double bottom with a divergence here, not only once but twice, here and then there, and that's a huge divergence from here to here. Suggests the oscillator went lower, but the price action is roughly the same, right? Or the oscillator is higher, the price action is the same. So it's basically saying here, and I'm going to draw all these indicators going to come up. This divergence is this divergence, and this divergence with the oscillator was higher would be this divergence. You can't get it off of this indicator though. But yeah, so it's basically right here and here. Um, so there's a lot of buying. Other little indicators on here. That's a sell signal. It's a sell signal. It's a buy signal. The arrows up, right? This one and this one. That's a buy, sell, buy, buy. Whale out, which is selling pressure. All of this was selling pressure. Then right here, if you look at it, you had the volume and the buying both going up until about right here. Then it went down and it stabilized, but the buying and the volume were lower here, but yet the price was higher here than it was there. So technically, this right here is also a divergence from there to there, with price action being from here to here. Now it's scaling in. You can delete that and that. It's scaling in this divergence here, right? But there was one more continuation push that it had to go up. So you can see the divergence here in this line, and you can see it here on the chart on that line. All right, let me get rid of these right there. So yeah, it's more visible like that. And then you got the candlesticks, hot and cold. Things are overbought. Rousseau is kind of like an RSI type of deal. Um, but yeah, I don't want to explain everything. It's going to take too damn long. This is the way I see it. I see it going up to about right here before that gap gets filled, and then consider that to be resistance. Fluctuates there till about, I would say, after Christmas, towards the end of December, and then starts to pivot down. And then we should have, now I gotta bring the graph back up for the chart lines and stuff. Now, according to my analysis, that was a buy zone, this was a buy zone, this was, and we're going to get another one, something like this, coming up by the middle or the end of January. In January, somewhere in the center of January, pretty much. More leaning towards the end of January, actually. So leaning towards the end rather than the beginning or the center, but somewhere within that time frame right there. That's what I'm looking at, which would put us to retest probably the $2.50 range after making it up to and moving around the $3 range for a while. And then we're going to get this divergence right here with this oscillator. Right here, it's basically going to go down, come back up, and then go down. So the oscillator is going to make a lower low, and the price is going to be a higher high. And that's what's going to create this divergence and slowly create this pullback down to $2.50 area. Might go a little bit lower to 240 or something. But from there, I believe this next cycle, which is this one right here, up until I guess June, you could say give or take, yeah, within the month of June, we should be coming down to an end of a trough, which would put the high of the trough somewhere with this red line where it's around May to around June. That would be the high of the trough, right? Um, in that window before the trough comes to an end. Now, the bigger cycle above it is still going to be more in a bullish scenario on the cycle. It doesn't come down to about right here, which is going to be towards the end of the year. So, if this cycle right here is a right handed translation, I expect us to get to $10 somewhere from May to August. And we all know August is a bad month. We add in, not only if we add in, like looking at United Healthcare, Humana, if we want to look at the seasonality and stuff like that, we could do that too. So let's go back to here. And TradingView does do seasonality pretty good now. They used to not do it as good. Um, let's do seasonality back in 2014. Okay. Percentages. There was a different graph, wasn't there? There it goes. Okay. So, I'll say damn near 10 years, the months that have been the greenest is going to be 7. So, you got 3, 3, 3, 6, and 6. So, it'd be 8, 5. That's a little bit green. That's pretty good. That's ugly as hell. So that's probably going to be a dip buying opportunity, possibly. I'm expecting one right here, according to seasonality with United Healthcare, and then we should see higher prices according to United Healthcare seasonality over the past 10 years, with May, June, July, and then slowly come to an end by August. Yeah, but then bounce maybe in October, maybe. Um, Now let's do averages. So the average return on, holy shit, a 5% return in October. Wow, 4% right there. That's pretty cool. The overall past 10 years, 15%. Um, but yeah, 2%. Well, you call that 2%. You call that 1.5%. You call that 2%. So, according to United Healthcare, be looking more forward to fucking October and November with the past 10 years. Let's bump it up. Let's give it some more fuel to work with here. Okay, that's barely anything. That's anything. November. Now let's scale it down. Let's do it since Clover's been around. All right, a little bit before Clover. So there's 4 plus 5%. July. Let's do, what are we on? 2000. That's 5 years. So I think 10 years is good though. Yeah. So I'll be looking for this window right here, probably between May and all the way up to November. But there's going to be some laggers somewhere. Hell, actually, wouldn't even count May. I would be more like June to November. That's probably the sweet spot. And then there's going to be a hole right here in September. So if anything, it's going to be up like that, then go sideways here, then down, divide the dip, and then it's probably going to go up just a little bit, and then go up just a little bit more, and then go down or something like that. Overall, the past 10 years have been 15% gains. Say 15% gains all the way to 1984. God damn. 30% gains, I don't think we're going to get that. Um, 5% gains. All right, now let's try Clover. How did I do this? Percentage, scales, regular, average. Was this one? No, that one. Okay, yeah. So it looks like that's supposed to be 21% a year. I don't know. I don't know about that. But yeah, May, June, July, August have been good months. October, maybe. But it definitely wasn't this month or this year. I wouldn't count on it, right? It's 3 to 3, 3 to 3, 3 to 3. The ones that hold the highest is going to be this one right here, June and July, 4 to 2, 4 to 2. Hell, May doesn't even really make it on there, but I don't know. There might be a pop in May. I'm looking for a buying opportunity by the end of January. It might be pushed out to February and March, according to the seasonality. Hell, the whole first quarter. Well, if it's negative, 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 then technically the time to be adding to your position probably be in April after it already consumed the negativity from these other two. Okay, now let's look at Molina because that's the next one. We can do natural gas too, just for the hell of it. Uh, 5, 5. See, July and August over here, and it was June and July for Clover. But if we give it more time to run, right? Let's see here, we want 2015. There we go. I'm gonna give it exactly 10 years. So that's been break even. I would call that break even. Maybe a little bit of cash on March. I would call that break even. That break even. That break even. Here goes a good month, July. That's break even. That's break even. Well, it looks like only July. So far, July's been standing out on almost every one we looked at. Let's look at natural gas for the shit for the kicks and giggles, shits and giggles. 10 years. Oh, you know what we forgot to do? Son of a gun. There we go. 14%. Well, you can round that to 15% year year over year for the average for within a 10-year time span. 3%, yeah, 3%. Still positive percentage, even with all these reds. Huh. Almost broke even, but positive, 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 still positive overall on an average. Even though in the ups and the positive months year over year, it's almost tied. Almost tied. This is not. And even though we had more positives here, it's still a lower average overall. There's got to be a way to figure something out there. Okay, now let's go to natural gas. So natural gas typically is red. It doesn't really give you any year the past 10 years have been negative 16%. God damn. Well, what's the positive month then? June and April. Oh, and August. So yeah, I guess it's like a summertime type of deal. Weird how natural gas goes up like in August, and that's pretty much the hottest month in Texas. And it's had a win rate of 6 out of 4. Lose, 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 win in April, tie, lose, lose, lose. So yeah, this one's saying that there's probably going to be something worth looking at in August. October. Okay, now let's look at this one. Six, yeah, 7%. Win July, June, May. This is the ETF that holds Clover Health. So May, June, July, a little bit in January. Looks like March negative and April negative. Hmm. So they are saying that March and April is probably going to be negative so far. There's an agreement there, but it looks like they're tied for month over month. You know, on winners and losers. And I don't want to look at Oscar. I don't want to look at that. Humana, no, no. We can look at this. The overall ETF for 15. Right there, no, right there. So average is 8%. That's pretty much what the S&P gives you year over year. But it's saying good times come in June, July, and maybe November. So they're all consistent with June and July. We might be able to see $10 within June or July. The way it looks seasonality wise, going over everything. But first, we got to break $5. And I'm hoping that we could break it by May. If we can break $5, dang it. If we can break $5 by May, then I think that anywhere from $8 to $10 is on the hell, even maybe $11 actually could be on the table within June, July, August. Maybe a dip, maybe 8, dip down to 5, and then go past up to 8 to 10 or something like that. Where was the other one at? It was United Healthcare. So yeah, October is a good month. November is a good month. And it's correlated with it more than it used to be. So if that's the case, if we use United Healthcare as the baseline correlating of the direction, right, and it's an upward trend, it's parabolic, then I'm thinking a dip probably at the end of January or sometime in February. Then sideways action, a bottom being placed, probably going past $5 by June or even May. June, though, more likely June. And then going up to $8 around July or August, and then going down to the nearest support, and then popping again in October and November to 10 or 11, maybe. We'll see what happens. But that's just seasonality wise. Okay. 40 minutes. Dang, it's been a long time. All right. So, with United Healthcare around a, the 2 week cycle should bottom out around March, start rolling up. At the same time, it's going to be fighting the monthly cycle on a downtrend, according to the graphs that I have. And there's going to be a strong push down after December, according to the graphs I have. Yeah, it's like the month is going to roll over, the 2 week is going to roll over, the day is going to roll over, the 3 day is going to roll over. They're all scheduled to like fucking go straight to hell by the end of December. But it looks like, according to what I'm looking at here with United Healthcare, it's going to find resistance here. All right. It's going to probably hold that as support. Go up till around the after the end of the year, the Christmas rally, and then slowly go sideways and fade all the way down to possibly February. And then it should find a bottom. Rather it be right here where the pivots were 6 to 1 at around $288, or a double bottom right over here where it was at $234. Remember, Warren Buffett bought United Healthcare, and he's a long-term investor. So if Clover Health does track United Healthcare, it's correlation, right? Um, then that's looking good in itself. Now let's look at Molina. Oh, Molina's scheduled to fucking crash big time. It's on a downward trend. It's gonna go. It's gonna crash and burn, boy. Um, yeah, it has really no pivots of support other than this one. That's the all-time low. It looks like it's gonna break it. Mm, the next area is probably gonna be $100, maybe 130, but I doubt it, given what I'm looking at here. It's gonna have to find a ultimate bottom, and that's gonna be towards the end of February. By then, God knows what the price could be. But on the daily chart, it says there's 8% right there support. Also, right here is 8%. Let's look at the weekly. There you go. $81 on the weekly. I would put a zone here. I would say $81 to $70. So 80 to $70, I would call that the bottoming zone if it does really crash hard. If not, and it just gets to that other zone we were looking at on the daily charts here, which was $100, well, 106, then that's where it could possibly be. But if it breaks $100, we'll go back to the weekly chart and we're going to be looking at $80, 70, $80. And then back to Clover. I think this is the accumulation zone. I don't see the price getting any lower than $2. I think we're going to have a higher high, higher low scenario play out over here, um, because the 2 week cycle should bottom towards the end of January, maybe the beginning of February. At the same time, the monthly cycle is still going to be pushing up. So when the 2 week cycle and the monthly cycle are pushing up simultaneously, that's going to prolong the monthly cycle to stay up even longer. But what's dragging the 1 day and the 3 day down is the 2 week cycle. Once the 2 week cycle bottoms, then the 1 day and the 3 day are going to start pushing up. And I expect, like, this indicator is going up too far, but so is that one. Something like this. All right. Higher highs and higher lows all the way through. Boom, boom, boom. Using the daily cycle here, you could probably say that that's where it's going to curl right here and go up on this one. So that's my forecast on that. But we need to break this downward trend right here with these little slashes. These, I need to change the color of them too. Probably better off white than anything. Right there you go. It looks a little messy also. Let's do it. Oops. To yellow. There you go. All right. I got to get rid of these bottoming lines because they're pretty much these zones right here. But like on psychoanalysis with Clover Health, this was a 60-cent zone. And if my psychoanalysis is correct, it does have 3 cycles instead of 2 within it, which would be, ending here to there, which would these both line up together. So this and this is going to be the ultimate bottom, right? Looks like this was, and this. See how, like, towards the right hand side of the cycles, typically where the trough goes up, tops here, and then goes down. So that's the bottoming of the trough, and I would think this one's going to be a right-handed trough as well. And if it is, that's what I'm looking at right here at this zone, which is $10 or $11. But don't get me wrong, there's still a zone right here. I just don't think it's that significant compared to this one. I think if we could break the $5 one, we should be able to break the $8 one and at least get up to the $10 range. At least that's my 2 cents. All right, you guys have a nice night now.